Good afternoon, traders. Welcome to Topstep's Trading Foundation. Day 2 of week 2. How you doing, guys?
I'm doing just dandy. I have a couple notes for the start too. I guess I can get to them now. A lot of folks are looking for examples. Something to throw in there is John, do you think you could, John Doherty, do you think you could throw in that coach's playbook from today? If you're looking for something where we specifically talk about certain strategies, we talked about gaps today and how to trade them with charts and stuff. We saw some feedback about that. Also feedback about live trading stuff. We want to do that. Here's an issue. I'll just reveal everything at the top here, is that we have to be careful as Topstep because we are not a CTA, all right, a commodity trading advisor registered, because we are a business. So we have to be careful about doing things that could be construed as actual live futures trading tips. But we do have some stuff in the works where we're trying to figure something out with that. So there might be some live trading soon. I know MP's been interested in that, Hug. So those were the two things I wanted to throw out there, and I'll give it back to you.
All right, thank you. And for all of you that are coming every day, hopefully you're finding some sort of benefit in the things that we're talking about. Trading is so far beyond just strategies and technical analysis. What we're trying to do here is put down some sort of a foundation, basically, of what some of our expectations, what some of our thoughts, what some of the things that we're going to go through as we go through our journey in trading. And I think it's as important, if not more important, to know ourselves more than we know our markets if we're going to be successful in this. So while we do and are planning on creating more content with deeper information regarding setup strategies, things like that, this is just the beginning, folks. And we're looking forward to having you go along the whole ride with us. So I'm going to go ahead and get started. JD, do you have anything that you want to mention?
If you have any questions, feel free to use that Q&A tab down at the bottom of your screen. Otherwise, jump in the chat, and Jack and I are here to answer anything you got. Thanks, everyone.
Yeah, and JD, could you throw in the link one more time to the landing page? I'm going to bookmark that, just throw it around. I wish there was a way to pin something in this chat, but there's Zoom hates us.
I believe yesterday's recording, Bruce is asking if it's been added to the Facebook page, YouTube page. I believe it has been. So, all right, let's jump in. As always, introducing myself, my name is John, Senior Performance Coach here at Topstep, although I much prefer middle-aged performance coach. I've got, in February, we're coming on 39 years of industry experience, not necessarily actively trading, more like 30 years of that. Come from a long line of traders. My dad was on the floor. My older brother was on the trading floor. And I'm the last Mohicans, last one in the family that's still in the industry. As the pit started to dwindle and opportunities started to increase in electronic trading, I left the pit in 2009 and I joined Topstep in 2011. And it's been my pleasure to have the opportunity to talk to and hopefully improve at least the knowledge, if not the performance, of thousands of traders from all around the world. So we're very happy to see you here. Love the fact that you guys talk about the where you're coming from. It's always great to see that we've got people again here from all around the world. Yes, you can hear the microwave. I'm working from home, and my wife is heating up some lunch. So hopefully that won't be too much of a distraction for you. The personality traits that we all have, and we all have bits and pieces of all the good traits and all the bad traits. There is no one size fits all solution. The list of concepts in this no way guarantees success. But just knowing about these, being cognizant of them, and thinking about them as we go through the trials and tribulations of futures trading is going to help us. There's a a Cherokee proverb that I think really suits the next 2 days of information. And I was going to save it for the end of of tomorrow, but I'm just going to go through it today. The Cherokee proverb that states there is a battle of two wolves inside of us. One is evil, it is anger, jealousy, greed, resentment, lies, inferiority, and ego. The other wolf is good. It's joy, peace, love, hope, humanity, kindness, empathy, and truth. Which is the wolf that wins? It's the one you feed. It's the one you feed. So it's very easy to get wrapped up in the negativities that we put upon ourselves, especially when we're involved in something as difficult as trading. If you feed that, that's what you're going to get. Try and remember to remain humble and enjoy what you're doing. So we're going to jump into today's content right now. So traits beneficial to trading success or successful trading. You really want to be coachable. And this is something that you're going to want to do on a daily basis. There's always more to know and more to learn. I've been in this industry for almost 40 years, and I continue to learn more and more, not just about markets because they're always changing, but also about myself. And as a performance coach, I've had many performance coaches. I've had many trading psychologists. I've worked with a lot of folks who have kind of, helped kind of build my ability to try and help others in that regard. But one of the things I love most about coaching is I learn more probably from the people that I'm coaching than I'm actually capable of coaching. It's a give and take thing. You're going to want to always remain wide open for new information, open for new ideas. If they don't work for you, then you can just move on, but make sure that you're consistently staying open for information that can help you find your way through this trading game. The next one to me is, I think, the most important one. It's even on the Cherokee proverb, humility. There's nobody that's bigger than the market. When you are addressing the market's environment, it's extremely important for you to remember who you are. And to the market, you're not much. You are just somebody who is trying to enter in and get out of the market in profitable ways. And if we can't stay humble, all of the rest of these fall by the wayside. If you are going to be coachable, you're going to have to remain humble. You're going to have to accept the fact that you don't know it all, that others may know more, that the market is, always going to be right. And the funny thing about humility is once you say you have it, you've lost it. It's like trust. If you lose trust, it's very hard to get back. If you say you're humble, you've lost your humility. So I try not to say that ever. But I also am one of the first to say that I don't know everything. Nobody knows everything. For us to be able to admit that gives us the opportunity to remain open for new information. There's a proverb somewhere, and I'm full of proverbs today, I guess, but it's hard to fill a glass that's already full. If you think you know it all, it's going to be hard for you to try and learn anything. So coachability, will keep yourself open for new information. Humility, allow yourself to stay open for that new information. Now, if you watch the market forecast, one of the things that I say at the end, after we all take our deep breath, is stay humble, grateful, and creative. And flexibility is a huge part of being creative. You've got to be able to accept change. You've got to be able to accept information that may be contrary to your thoughts and ideas as far as where you think the market's going to go, who you think is involved in the market. If you are so biased as to one side or the other, it's going to be difficult again for you to try and accept information that's contrary to what you think. Now, a very smart man once told me, when you are planning a trade and the plan sets up and you put that trade on, we don't get any smarter. So there is a caveat to creativity and flexibility. It's something that takes experience to learn to use to your best advantage. Flexibility and creativity involves a whole lot of intuition. Of course, it's really easy for us to discount any information that we disagree with. We can pretty much create any situation in our minds that we put our minds to. But once you've had the idea for the trade, you've got the hypothesis, the market offers you the opportunity to get into the trade in a manner that is manageable as far as risk is concerned, then you put the trade on. It's very easy to be over flexible. It's very easy to manufacture things that are going to, at first, probably cause us to create a discount of things that may mean something if something is going to change in the market or in the trade. And then it becomes more and more difficult to distinguish what is a real change. How flexible should we be? It's been my experience that traders overmanage trades, depending on the time frame of chart that you're looking at, depending on the things that you're looking at. True change in the marketplace sometimes is difficult to read, and sometimes we miss it, and it's easy to create change in the marketplace that may actually not be there. But if you're unwilling to accept change, there's going to be situations when you may be in a trade in the market, something changes in the market, and you don't catch it. That's all part of being flexible and creative in what we're doing here, in accepting the market's information. I think it's Mark Douglas that says it best. We are in the market's environment. The market's not in our environment. We have to be able to accept the information as it is, not as we want it to be. If you've been at this for a while and you've taken your lumps and you've seen some of the good side and the bad side, you know how tenacious you're going to need to be. Trading will test you. The things that we do, there's going to be really good days and there's going to be wonderful exhilarations in accomplishing good trades and making money and all of those things. And there's going to be periods when things aren't so easy. This quote that I have under tenacity is something my dad used to say. If you come to group coaching, my dad used to, call him up after a trading day, and he would have all these kind of, I guess, trading colloquialisms. He stole most of them from quotes that he'd heard, and as we all do. But one of the things that he said to me was, the hardest steel comes from the hottest forge. If you've had a bad day today, there's a lot to learn from that. Are you going to quit, or are you going to learn, take your lump, and you're going to continue to move on? The traders that I've known and that I've known personally or just been around have been some of the toughest people that I know. the um the tenacity that they show is tremendous. They take lump after lump and keep coming back as long as they can, and they end up, turning into some great traders. I've known a lot of great traders, and they would definitely agree that the hardest steel comes from the hottest forge. uh I can remember, we're telling stories again here, but um asking my dad, even before I started trading, when I'd go to work with him and walk around the trading floor, and there was some people that making and losing a lot of money there, but you would never know it by the way they treated, most people treated us. They were all jovial, they were all fun, they were all funny, and my dad would have called them characters, and I said, well, Dad, why is everybody on the trading floor so fun? Why are they so funny? And he says, well, yeah, there's a lot of characters on the floor, son, but you got to remember, hard times breed character. So this is not going to be easy. The rewards can be tremendous. The roller coaster that we're on is, something you have to be passionate for and passionate about. You can take the carousel, which just goes round and round and up and down a little bit, or you can take the roller coaster. I preferred the roller coaster, and to a sense, I still agree with that. We kind of already talked about creativity when we were talking about flexibility, but being prepared to accept contrary information. There's those that are very mathematical and meticulous in their decision-making processes when it comes to trading. There are those that code strategies that they use, and that works for them for a while, but once they don't work, they don't seem to work again. Even those that are technical and mechanical in their trading have to be able to accept the fact that the strategy is no longer working, and I'm going to have to find something else to look at. If you listen to Jim Dalton talk about why humans are better traders than machines, he says it, I think, very eloquently. And he says, humans have the ability to adapt and change very quickly. Machines, you're going to have to go in and rewrite the code. It's going to take time. A lot of these HFT firms and algo firms, they have MIT grads in a big room just writing strategies and trying to prepare for the next situation or the next market state change so they can continue to print money. But my brother yells at me when I say this, and it's true. In my experience, it's been very difficult for engineers and mathematicians to become discretionary traders, because they believe that the world, it comes in 1 + 1 = 2, and that binary code can create anything. But the markets aren't that way. 1 + 1 doesn't always equal 2 in the marketplace. There's situations when the market's going to change the questions once you've found the answers. And if you are unable to accept that change, if you are always looking for the right answer, it's going to drive you crazy. And because trading to me has always been a whole brained activity, you've got your analytical side and you've got your creative side. When you can meet those two together and always be thinking about the marketplace in your best interest, then you're on to something. You are going to have to be able to review your experience and your performance in trading. You're going to have to be reflective. You're going to have to be thinking about, okay, my process. How is my process doing? How am I doing with my preparation? Am I actually doing my preparation? So very important to put together a system for you to remain in that process and to remain in your homework, if you will. preparation is always, I always just call it homework. We're going to put together some sort of a plan to do your homework. What are the tools that you're using? How are they supposed to look? How are you going to notice changes in the marketplace? How are you going to hypothesize what you're going to do in these cases? And what are you going to do once one of those hypotheses comes true? In week 4, we're going to be talking about the business plan and the trading plan. We're going to talk about a few ways to put together a system, a checklist, an outline that you can look at each day before you trade in each market that you're thinking about trading. And you're going to take a look, what is the market doing? How good of a job is it doing it? What are the tools that I'm looking for telling me might happen? If we're going to put together hypothesis, if this happens, then I'm going to look to this strategy. If I'm going to be, thinking about this hypothesis, if this one comes true, then I'm going to change my strategy and trade to that hypothesis. We're not always going to be right, but at the very least, we're going to be prepared. Doing the homework makes you prepared. And if none of the hypotheses that you've come up with in the morning before you sit down to trade, or as you sit down to trade, comes to fruition, you don't do anything. And there's nothing wrong with that. Be reflective in your ability to stick to your disciplines. Discipline is a dirty word. Nobody likes it. It's really not that fun to be disciplined. The rules that we place for ourselves, maybe it's a daily loss limit. Maybe my daily loss limit's $500. How often do I adhere to it? My weekly loss limit, how often do I adhere to it? I've got a really simple rule that if my first 3 trades in a trading day are losses, I have to stop, at the very least, take a break and come back later on and see maybe there's an opportunity later. How often do I stick to it? You can make this part of your trading plan. You can make this part of your daily worksheet. There's lots of ways that you can keep track of it and give yourself a discipline score. How often do I take trades that are only in my strategy? How often do I take trades that are out of my strategy or process, whichever word you prefer? Strategy, process, to me, they're interchangeable. You are going to give yourself affirmations for doing good things, for keeping in your strategy or your process, of sticking to the rules that you've put in front of yourselves, to sticking to the discipline. There's no reward for sticking to the discipline, because you can be disciplined on any given day and still lose money. It's that kind of a game. But if you can take something away from a day like that and give yourself the affirmation, well, wasn't in tune with the market today, but at least I followed my process. At least I followed what I was looking at. And then validation. Your process, your strategy, your preparation for your strategy, your discipline, your affirmation. How are you going to validate if any of this is working if you don't do it consistently? That's why I believe it is so important to put together some sort of a outline, checklist, whatever it is, before you sit down every morning. Because if you can't put your finger on the quality decisions that you make versus the not so quality mistakes that you've done, how are you going to validate your process? How are you going to validate that? You got to stay in your process. You got to follow it. If you optimize too much, then you're going to just get confused and have no real information with which to lean on, if you will. And the last one is the psychology. There are a lot of traders that are, that come off as very confident. Of course, if you've been trading for a while and you're successful at it, that's going to breed some confidence. My question is there a predisposition for a particular personality trait or trading or psychology that makes somebody more likely to succeed as a trader than somebody else? Been searching for this answer for a long time, and the only thing I can come up with is no. I don't think that there is any particular personality trait other than the people that I've seen become wildly successful have really not been afraid of not being successful. Seems like the less you count on being successful, the better your opportunities are to become successful. The predisposition that I run into most is the fact that humans aren't hardwired to succeed at this in large numbers. Nobody likes to take a loss. So in the idea that we don't want to take a loss, we'll usually default to something else, like maybe waiting. Put the trade on, the trade goes against me, and I said, well, I'm just going to wait and see if the market will come back and make me whole again. And we end up holding on to losing trades for way too long and for way too much money. We create big losing trades. The other side of that coin is we get a winning trade on. It feels very good to have a winning trade. So we are compelled to take that winning trade off long before it comes to any fruition or the ability to really pay us much. That's the predisposition I see most, especially in new traders. It's changing that, accepting losses quickly, not letting them get to us mentally or psychologically, and then moving on to the next opportunity. Always admit that your trade is wrong or that your trade is a loss. Get out of it. Don't fall in love with it. Don't wish it. Don't hope it back. Don't stand on your head, hold your breath, bang on the desk. Whatever you think is going to help make that trade move back in your position is not going to work. So get used to looking for the asymmetric opportunity. That's what we're looking for. That's what everybody should be looking for. That's what professional traders do. They're trading close to points of failure, invalidation, I like to call them, and they're making the most of the days and the trades that they have, that they've got good opportunities for greater profit than the risk that they have to take. Excuse me 1 second. I apologize. All right. So I'm going to focus a little bit on some proactive beliefs. And keeping these in mind, take a screenshot if you want. These are all truths from where I sit. There's nothing that is untrue in any of these. And if we keep these in our mind, we can help feed our wolf, if you will, that is good. Okay. Tomorrow we're going to be talking about all the things that we can teach ourselves, that we can feed our bad wolf. These are all things that are going to feed the good wolf. There are no failures, only feedback and lessons learned. If we could all just live this way, we could feel a lot better about ourselves. I know every losing trade, especially at the beginning of my career, I felt so dejected, like I was a bad person because I was unable to have a winning trade. It's not until standing next to a guy who used to verbally say, okay, good, when he'd get out of a losing trade, that it dawned on me that we could look at this another way. When we have a problem, there is a solution to it. Every problem has a solution, one way or another. I love this one. All I need to know is either inside me or available to me. Because I firmly believe that a whole lot more people that get involved in discretionary day trading could be successful at this if they would believe this. You probably know everything you need to know to be successful at this. It's all the noise that gets in the way. And if you don't know enough, everything that you need is available to you. creativity is at my core because I can always try something different. What is trading futures all about? It's all about change. It's all about price change. It's about profiting from price change. It's about changing ourselves, about changing our lives. It's about changing our income. It's all about change. And creativity is one of the best ways that I can think of to help you create that change. You can always try something different. When they say the definition of insanity is doing the same thing and expecting a different outcome, here's your out for that. If you consistently do something in the market the same way every time and it never works, and we all have this, you got to try something different. If you ever just click, and the second you click, you say to yourself, I always do this and it never works, and it again doesn't work this time. That's creativity knocking at your door saying, hey, next time you see that, try something different. The mind and body are part of the same system. Nothing could be more true than that. One of the things that I ask my personal performance coaching clients do is to keep an emotional journal that keeps track of what's going on at top of mind, behind the scenes in the mind, and physical changes during trades. We review those trades. We live our way through those trades again at the end of the day, so we can help in number one, increase our learning curve, and hopefully find something out about ourselves and about the way our emotions and our bodies are telling us maybe it's time to act, but usually they don't tell you which way. Knowledge is not power. Application of knowledge is power. It makes me think of the guys on the trading floor that were really good technicians, had great numbers. And instead of trading, they would sell these numbers to other traders, because while they were able to have the knowledge and to create the opportunities, they were unable to put themselves in a situation where they could benefit from their own knowledge. There were a lot of guys that were great technicians but couldn't trade. So they sold their knowledge to those who could trade. The application of that power was what made good traders. You hear me say it all the time, stay patient. If I am patient, there will always be another trade. Said it this morning on the forecast. I said, it's going to be an interesting day. It's going to be a challenging day. I remind myself to stay patient. And if I miss a trade, it's okay, because there will be another opportunity coming down the pipe. Don't be upset about missing trades. Some people would so argue with me about that, but they miss trades too. I don't always have to be in the market. You don't always have to be in the market. Used to make me crazy when guys would just have to have something on, even though nothing was going on. So what are you doing? I said, well, you can't make any money if you're not in the market. Well, you can't lose any either. Have a reason to be in the market. This one is especially true to my heart, because I talk about this quite a bit. If the market is made up of people like me, so if I can determine my poor decisions, I can take the other side of the trade with pretty good probability. Most of us are point and click traders, are fear-based traders. We're going to be pushed emotionally into trades, and we're going to be pushed emotionally into trades over and over again. Many of you have probably heard the story. I was really good at buying highs and selling lows, buying highs and selling lows. So those poor decisions I was making over and over again, until somebody pointed out to me, he said, you have no idea how good you are at this. And I said, what are you talking about? I stood here for 3 days. Every trade's been a loss. I buy every high. I sell every low. How can you tell me I'm good at this? And he said, well, it's the timing. But when you decide to act, boy, it's one extreme or the other. Maybe you should think about buying when you want to sell it and selling when you want to buy it. And I gave him a shot in the gut and ran out of the pit and thought about it that night, and he was right. The first time I did this, it was physically painful. I mean, everything inside you is telling you you're missing the big move to the upside. Now you've got to stand there and sell it. But I did it and it worked, and it worked again. It didn't work every time, but it let me know that he was right. I was finding good trade locations. I was timing the market well. The only thing I had to work on was the direction. So when I figured out that I could take the opposite of my own bad decisions, things started to change for me, and with good probability. I have the potential to profit on any trade I take. Simple, true. I follow all my rules and size my trades appropriately. And going back to that discipline thing. I only take high probability setups that are in line with my strategy. It would be nice if that were true. Every one of these rules, every one of these I have broken and probably still break from time to time. We're only human. One of the things Dr. Menaker has given to the trading world, if you ask me, is his hierarchy of trading decisions, or his hierarchy of decision making. I'm going to see that moving on, but there's 4 different ways we can make a decision. One, we can make a decision in trading that's part of our strategy and is a winning trade. That's a number 1. Number 2 is we take a trade that's part of our strategy that's a loss. Okay, there's a little bit of damage there. Number 3 is a trade that we take outside of our strategy and is a loss. We pay a price for trading outside of our strategy. The most damaging one is a number 4, and that's taking a trade outside your strategy and getting paid for it. That's the most damaging. You're just ingraining bad behavior in that regard. So got to take the trades, high probability setups in line with your strategy. I've broken all of these, no doubt about it. I'm able to visualize price hitting my target, and it's okay to be happy taking profits. This is one thing that I dealt with when I was a prop trader in the S&Ps early 90s. I knew that if I was going to make money, somebody else was going to lose it. And I seem to have a problem with that. But, if you're in the game, you're going to have to take the punches, and you're going to have to, take the wins too. It wasn't very long until I figured out none of these traders would have any problem taking my money. So I'm going to be happy when I make money, and I'm going to visualize success. I'm confident and aligned with my strategy while managing emotions like anxiety, confusion, fear, and greed. Confident and aligned with my strategy while managing emotions like anxiety, confusion, fear, and greed. Some of those, the only way I'm going to align with my strategy is just get out, especially when confusion comes in. And when I'm in a trade and I start to get greedy, I know it's time to get out of that trade. It's more likely going to turn around and take my stop if I start getting greedy. But managing those emotions, if we really manage our emotions, we can manage our response to those emotions. I get in arguments all the time. If you can't control your emotions, you'll never be a good trader. Well, controlling emotions is one thing. It's difficult. It takes a lot of energy. I've preferred to take that emotion and use it to my advantage. If I'm feeling an emotion in a certain situation, I know that the fellow traders, other traders in my time frame, other traders are thinking and feeling the same way. And I also know that most of them are going to lose. How are they going to respond to this? And that's one of the ones that you can start thinking about what your competitors or what your like-minded traders would do, knowing they're most likely going to lose, and take the opposite. I put my full attention into each trade, staying focused and on the knowledgeable trader inside me. This is I think it takes a lot of energy to keep that focus, and it's very important to keep that focus. So along with this one, I like to remind people, give yourself 5 or 10 minutes every half hour or every hour to walk around, get the blood moving, make sure that you are alert and that you are making good decisions, because if you are dehydrated, it can affect your decision-making process. If you are hungry, it can affect your decision-making process. If your blood sugar is too high or too low, it can affect your decision-making process. Just about anything can affect your decision-making process. If you're sick, hungover, tired, angry, something in outside of trading is upsetting you, all of these things can affect your decision-making process. I celebrate when I've followed my plan regardless of outcome. We talked about, you can follow your trading plan and have a losing day, and that's okay. It's still a win to one degree because you followed your plan. You held your discipline that day. That plan may another day make you a lot of money. Taking high probability risks proves, taking high probability risks proves my belief in myself, and self-trust is something that is so difficult to come by. I've worked with a lot of traders, ladies and gentlemen, and I've seen traders go from having no idea how to find a good trade location to becoming expert trade locators. And I can tell them till I'm blue in the face that I think that they are doing very well with half of the transaction. We're taking trades that are close to points of invalidation, and we're doing so consistently. That is great. Now you have to believe in yourself and in your ability to be able to find those with relative consistency. That's a little bit more difficult. So, traits be beneficial to successful trading. I've made a change to this, I think. I have to take a look at this, but this is a quote that I kind of took from an email that I was writing to somebody that I was working with. And it reads like this: a deep symbiotic union, including self-understanding, market knowledge, and creative application of multiple market-based strategies is necessary for consistent profitability. Understanding yourself, understanding the marketplace, and creatively applying multiple market state-based strategies. That's what's missing. Multiple market state-based strategies. Strategies, if you're in a trend, a range-bound strategy may not work that well. If you're in a range-bound market, a trending strategy may not work that well. I've got to fix this. Sorry about that. But let's see if we've got thoughts, ideas, questions, anything that we've got to look at. We've got a little bit of time left here, and hopefully you enjoyed and saw yourself in a little bit of this. Don't forget the two wolves, evil and good. Today we looked at the good one. Tomorrow we'll look at the evil one.
Oh boy.
Feed the good one.
Yeah, I want to throw out one thing, and then we have some really good questions here that I think you'll have some answers to. Is kind of when you talked about, I forget if it was Jared Tendler or Menaker who was talking about this, of how you're hardwired in a lot of ways not to be good at this. If you think about it, we all came from the grasslands, right? And what made you successful at passing down your DNA, right, was overweighting the probability that there was a lion behind that bush that was going to eat you. And even if it was only a 1% chance, if you were scared of it every time, no harm, no foul, you survived, right? Trading is exactly the opposite of that, like that base feeling in there, right? You need to weigh those risks accordingly. And we're terrible at it. It's the same way people are afraid of flying, but they'll drive even though it's statistically
Much riskier.
much riskier, right? And where this manifests itself is that, say you made $1,000 or lost $1,000, people will harbor far more negative feelings about losing that $1,000 than they do gain joy from making the $1,000.
They say
And
it's
that's almost
2-1.
2-1, right? And you can see how that's just not a great thing as far as trading goes. We see a lot of people here, we're talking about they have problems holding losers. That's probably the most common, that along with over trading are probably the two most common things we see. You hold those with so much more conviction. Suddenly you're sure it's going to turn around, but how many people do that with their winners? Like, it's going to keep on going. Just something to think about there before we get to the questions. First question, do you have any habits to build these traits? Nico here says that he has a jar that says no impulse trade, and he throws a paper clip in there. Every time he does it, it has to reset. Do you have any similar strategies on what you do?
Well, as part of the journal, the emotional journal that I'm talking about, I will usually give myself a rating as to how close to perfect discipline I had in that trade, and then go trade by trade and then come up with an average at the end of the day. If I'm maybe 75% true to my discipline on a given day, that's a good day. That's a good day. And it's not easy to stick to a hard discipline. One of the things that gets in my head that creates the temptation to step away from my discipline is two words. What if? What if this is the one that's going to get me whole again? What if this is the one that's going to make all my money? What if? If we can't step away, that's a lapse in discipline. So, it just like the hierarchy of decision making. If I was perfectly disciplined in a trade, that's a number one. The higher the number, the less disciplined I am.
Good. This is a good general question from Simon. It says,
Hi, Simon.
The theory of market efficiency says that we can't beat the market. So how come some do? Or are they just lucky? The market tries to take as much money from as many people as possible most of the time. How do we beat such a monster? I want to throw out there to start, because I answered this for someone in one of the earlier ones before, just so we're not bullshitting here, essentially. It's very hard to be profitable day trading things, and the stats are out there, right? You can look at your things, but we'll just tell you, 80-90% of retail traders won't be profitable.
Mm-hmm.
So it is difficult. As to the first point, this gets to my economic stuff, is the market, as you could probably see, isn't totally efficient. Like, you're not going to, it's gotten more so, but for instance, you're probably on average, and they've proven this, you're not going to beat the market long term by, say, like picking a basket of stocks, right? But in the day, there's a lot of different participants who are doing different things for different reasons, which creates opportunities. I'll just say it by example, for instance. So I used to trade US Treasuries, and if you can notice things involving, there's things called convexity hedging that mortgages do, right? And if the yields go a certain amount, they have to hedge their books and sell or buy massive amounts of treasuries, right? The market's still efficient. They need the liquidity to do that. And you can, if you have the knowledge of that, take advantage of it. So I would say the market is mostly efficient, and it is very hard to do, which is why not a large percentage of people are able to do it. Ho, do you have anything to add there?
No, I think that's very well put. I mean, it's it goes back to the first answer of the question, if is there a lion behind that bush or isn't there? It's that fear of loss that creates the loss for a lot of day traders. It's if we're going to be trading stocks, it's extremely difficult to beat the market, but we're trading leveraged products here. There were people I know that kept $20,000 in their account at all times, but they could make $20,000 in a day. So, this is it's a different game.
Yeah, it's a good example. What Jason said, you're playing against the best in the world from day one. And that's what separates it. Like if you're taking tennis lessons or something like that, you start at people against your level, right? And you get better, you move up. But yeah, every time you step into the market, you're up against Goldman Sachs, right? Renaissance, all the things like that. So it makes it very difficult, which is why you need to really know what you're doing and why. You can't just assume. I think a lot of people have the mistaken assumption that this is just something that you can kind of walk into. And I felt some of this when I took my job at the prop shop after college, of like, oh yeah, I'm gonna be at a trading firm. This is, on this path, this is how much money I'm gonna make in 5 years, 8 years. It's gonna be great. Well, yeah, I mean, like that's the case if you want that, become an engineer or go work at IBM and get your little kick up each year. Trading, it's completely what you can do now, right? So you have to be aware of what you're going up against and know what you're doing and why. And don't just do it because it's something you want to do. I tend to struggle mentally with I'm reading a question. I'm not just admitting to my mental struggles right now. I tend to struggle mentally with the balance between giving a trade enough room to work versus cutting a loss early. What's the right approach here?
Oh, such a common question, common trade. Hang on a second, I lost it here. Where did it go?
Oh, the question?
Yeah. Oh,
I hit done because we were answering it live. So if you go to answered, it'll be in there.
Oh, okay. All right. So it goes back to what we were talking about is struggling mentally with the balance between giving a trade enough room to work versus cutting a loss early. What's the right approach here? Is the good friend of mine told me a long time ago, is we don't get any smarter once the trade is on. I think it's an intuition that tells us, well, a lot of it depends on your time frame. God, this is a hard question to answer because I've been trying to answer it for so many years. Here, let me put it this way. Range bound trades should have a solid profit target. If it doesn't get there, then that's just part of the game. Trending trades should probably not have a profit target. The trending trades are the ones that you're going to want to let go, and you're going to make up money, and some of it's going to come back. It's going to go your way. It's going to come back a little bit. It's getting out on those pullbacks that I think is so difficult for traders who are good at good trade locations and working on becoming better trade managers. Now, I'm far from perfect. I'm a good trade locator. I can find good trade locations and I can trade with minimal risk. I still have trouble managing longer term trades, even as a day trader. If I'm looking at a trade and I think this is an all day sucker, it's so hard for me to stay in because I know that when the market gives me a certain amount of money or gets to a certain percentage of that profit target, my brain is going to start thinking, this is probably worth more than I thought it was. And it's at that moment that most of the time I'm going to take that trade and then look for the next opportunity, because when I start to get greedy, It's been proven to me over and over again that the trade is probably running out of gas. It's the same thing as, finding the same opportunities as many others and then taking the opposite direction and being right. I worked with a trader who was a gold trader who was always looking for the big home runs, and he was trailing his stop. And there were days that he probably could have gotten to his big home run, but we're always trailing our stop too closely behind. He never took a profit target on a high. He always was getting taken out by his stops. So with that, I say, if you're a golfer, every putt that you leave short will not fall. But it's a hard thing to do. Becoming a good trade locator is one thing. Managing trades under duress, we don't get any smarter once we're in the trade. But once just for me, once I start getting greedy, I know that I'd probably be better off taking the trade right then.
Yeah. Let me guess. He was a gold guy. He was long gold.
Yeah.
Yeah. Gold people are like that. That kind of goes into one thing to think about when we talk about not getting married to your ideas. And I'll pick on gold people because they're probably the worst. Besides Bitcoin, I have nothing against either product, but people in those tend to be zealots, right? Like they got gold buried in their yard, they got beans in the basement, and it's going to 10,000 every year. Fine, if that's what you want to do it. But when you're trading, you got to be open to both sides of it. I'd also say, just like as far as when to hold it and get out, there's practical ways to do it. We talked about trailing. It comes down to having a trading plan, right? Like maybe it's, experiment with, maybe you have a trailing stop that's, say, 50% of whatever it is, right? Or you could scale out of positions, right? Where if you have, instead of an E-mini, say you have 10 micros on, you take off half of it and then let the other half ride. But that's where I've seen in my career, the people that were really killing it had, and I wish I could say that I was someone that could do this, but where they made their bones was holding on to winners longer, with that conviction. Because as we said earlier, the urge to hold it's nonsensical, but we want to hold losses for some reason.
Right. The opposite of what we should do.
I'll give you an easy, a couple quick ones here, Hogue. Hi, for drawing daily volume profiles for ZN, that's the 10-year future, on 30-minute charts, since that market opens at 7:20 a.m. Where do you start the profile? 7 a.m. to 2 p.m. or 7:30 to 2 p.m.?
I'll usually go 7:30 and then watch the 10 minutes before that.
Simon asked, once we become funded traders with Topstep, do we receive one-on-one coaching? We're at a capacity. We don't have one-on-one coaching, does not come with that. You will have more access to our, if you have issues, well, obviously we do twice a week group coaching. You can bring your questions. You'll have more access to our risk management team, but it won't be something like, you won't get like an hour a week or something. We just don't have the capacity for that right now.
Good question, though.
Yeah, it is a good question. Determining ranging or trending markets is easy in hindsight. How do you do it in real time? This reminded me of, I just looked it up. There's this Onion headline that's like, lottery numbers so obvious in hindsight, which I think we all, which we all get that. I think that, yes, obviously it's easy in hindsight, but Hogue, I'll let you take this. But I think too that, I mean, for instance, if you look at the last year in the S&P or something, we're very clearly in an upward trend, right?
Mm-hmm.
There's a lot of markets I could point to right now and say it's pretty obvious what the trend is. So that's where the probability comes into it, right? It could break down. It could start going sideways.
Mm-hmm.
I think you just have to pick your time frame and trust the current trend and just be judicious with how much heat you're going to take before you get out of it. Hogan, anything you would add there?
Yeah, it's all part of understanding the auction process. You know, a trend that's very strong to the upside is eventually going to stop. How do we see it? How do we know when it's going to stop? It's going to show less volume, drop in open interest, drop in momentum. There's hints to that. So it's understanding of the auction process and starting from the top down. Jack was talking about the monthly and the weekly and the daily, and that's where it starts, and then you get closer and closer into where your time frame you're going to trade in, and the reversal patterns may happen in a day, but most of the time it's almost like major changes in the market state, or like trying to turn a battleship around in harbor. It's going to take some time.
Cool.
So markets are going to go from trending to balance to trending to balance. Once in a while, you'll see that V bottom like we saw last year in the S&Ps, but those are face rippers.
Yeah, face rippers will happen, but that's why it's important to stick. Sorry, I was reading questions while I talked, so go slowly. That's why it's important to have, like I posted that long-term capital management in there, is you need to follow some sort of hard stop limit or P&L limit, because it's the first thing you learn about it. The market can stay irrational longer than you can say solve it. And it's true, but it doesn't really matter who you are, especially with leveraged products. Like, you can bag hold stocks if you want, right? I mean, like, the worst it can do is go to zero. But with leveraged products, it could always get worse. So you need to have that.
And never believe it when they tell you it can't go to zero.
Yeah.
We were around for the May expiration last year in crude oil. It can go to zero.
Oh yeah. When I start, like, the first stock trades I ever took, like when I was in college, I think I've told the story before on the podcast. It's like the first thing I bought, for reference, this would have been like in 2007, 2008, was all I'd learned about in econ is just, value investments and stuff like that. And then it's like, what did I buy? Oh, Bear Stearns. It's like half the price it was. It was a steal. Company's been around for 100 and something years.
It's not going anywhere.
Yeah. And it didn't, right? I just closed the portfolio and never checked. Anything else here? Yeah. John says, I'm in step 2, been out for a couple of weeks. The 2 contracts are giving me trouble. I have to know, is 2, I think I need a little more context there. Like, only having 2 contracts is the problem. We can, if you ask us again tomorrow with a little more context, we can dive into that. And then, yes, only 2 contracts. I think if you start something like the scaling plan does, like we mentioned yesterday, exist at all prop shops, right? You're always going to be starting with a smaller position and then working your way up. The idea is usually, and I understand it can be difficult, but it's always told to me, is like, if you can't make things work with 2 contracts, or like 1 contract even, then, like, if someone were investing in you, like if you were looking at your business proposal, it would be like, well, why do we need more? I think especially it depends on what you trade to, but remember, something like this is a little inside baseball, but so we haven't changed like the profit targets in a long time. And something like a NASDAQ future is probably worth 5 times the value of like when we started. So for instance, like 2 NQ futures now is equivalent in nominal value of like 10 NQ futures
Mhm. 10 years ago.
10 years ago.
Mhm.
So we can maybe talk through more strategies for when you only have 2 contracts. I haven't thought about it too much over the top of my head, but yeah, keep asking if you can refine that a little bit. We'll try and help you out there. Yeah, I think that's what we got for now. So, or someone asks, what is the secondary time for bond futures? I usually only trade from 7:30 to 8:30. I mean, if
They close at 2, so
yeah,
looking for the higher volume periods of time. It's that first hour or two in the last hour or two.
yeah. Okay, cool. We'll answer some. We'll think about that some more, John, and talk. John Harris, and we'll talk to you about that. Come back to you like tomorrow. Okay, that's all we got for now, Hogue.
All right. Well, thank you all again. Thank you, Jack. Thank you, John. And we will be back tomorrow thinking about the evil wolf and how we're going to feed the good wolf. Until then, have a great day. Have a great trading day the rest of the day tomorrow. And we'll see you then. Have a good one.